It's the blog segment. The blog. The blog.
What great music.
I have a sunspot following me around.
Yeah, his name's Jake.
Okay, so what I wanted to talk about today. Now, again, this segment, the blog segment, I talk about what's going on in my office. And I have spoken on this before, this topic, but it keeps popping up, so I'm going to talk about it again. And it's got to do with what people call equity loans. Okay,
Mm-hmm.
so a lot of people don't understand.
Like HELOCs?
Very good. You know, HELOC stands for Home Equity Line of Credit. Okay, so a lot of people who have these loans don't really understand what it is. Okay, they think it's, you know, that they don't understand that it's connected to their house. Okay, well, I got this other loan. I don't know. It's and remember back in the day, in 2005, 2006, a lot of this people were buying with two mortgages. They'd get an 80% mortgage, and then they get a 20% mortgage, a second mortgage. So a lot of people understand that to be a mortgage. But when you go out and you get with this HELOC, as Jim just mentioned, the Home Equity Line of Credit, what that is, again, is a second mortgage, or it could be a third mortgage if I had a second mortgage already. But it's using the equity in my home to secure a loan that I'm going to get from the bank. And this happened, again, this in the 2006, through that time frame. A lot of people were getting these loans. And that was about 10 or a little, these loans were 10 to 15 years in maturity. So a lot of them are coming due now. And another thing that happened in 2008, when people were going into foreclosure, they would get a loan modification and on their first mortgage, and they would they just stop paying their second mortgage. And so a lot of these people, it's been 8 years. They haven't made a payment on the second mortgage. They haven't heard anything from them. They don't know what's going on. They figure that loan's gone. It's beyond the statute of limitations. So they don't even worry about it anymore. It's just some loan that was there, and I don't know what's going on. It's gone. But here's the thing. It ain't gone, right? That loan, It ain't gone. That loan is an equity line of credit.
I see what you did there. Trying to talk to the regular people using a proper English.
Actually, I was just talking like I always talk, Jim. It ain't. It ain't gone. That, again, is connected to your home. They still have a secured claim on your home. That lien is there. Okay, so when you go to try to sell your home, you're going to have to clear up that lien. You're going to have to pay something, probably. Okay, but here's the worst part.
It gets worse?
Yes. If you have equity in your home, so maybe it's been 8 years and you haven't heard from them. And now in Illinois, we don't have a lot of problems with this because our values aren't going up as much as they.
Well,
let
me tell you something. There's a lot of truth to that.
Yes. So, but if your value goes up, and as I'm making payments to my mortgage company, right, I'm paying down the principal, so I'm creating equity in my house. Well, that's also creating an opportunity for these second mortgage companies to foreclose Okay, you don't even realize they can foreclose. So I had a couple people just this last week, and they're facing exactly the situation I'm talking about. They haven't made a payment since 2010. And they believe that this loan was gone, so they kept asking, "Well, isn't this the statute of limitations? Isn't there some time when this just goes away?" And the answer again is no. It's equity secured claims don't just go away because they're filed with the clerk, with the county, and that's a lien on the property, and it remains. So even this, I filed bankruptcy, so it's gone, right? I don't owe them anymore. And the answer is you don't owe them anymore because you filed bankruptcy, but they still have a lien on your home. They could still foreclose.
So how do you get rid of this lien?
That's a very good question, and there's not an easy answer for that.
I figured.
Okay. So usually what you want to do, and this is what I was telling people, in 2010, 2011, is work out something then with them because there was no equity in the home, so all these loans were kind of worthless. But now as the equity starts building up again, now they're reviving, right? And so I got a client, again, hasn't heard from 2010, and they got a foreclosure notice. They're foreclosing on their home. And they were shocked that this could happen. How can this happen? How can they foreclose on my home? I haven't heard from them forever. And so again, so you got to get ahead of this. first you have to understand what a home equity line of credit is. Okay, that it is a lien on your property, and that if you don't pay it, they can foreclose. So first you have to understand that. And again, a lot of people don't understand that. They believe that it's just some sort of personal loan. And that's one reason why they get into it, because they don't understand that they're putting their home at risk. But these HELOCs, and one reason why...
It just says it right in the name, though, home equity. It just makes.
I agree, but it doesn't immediately say that they're securing it against it. And a lot of people don't even put that together. What a HELOC is, right? You know, it's called a HELOC, but they don't know why it's called a HELOC. And it's a lot of times the people sell them to you, they don't want you to know about what's going. You know, I'm not trying to say they're being deceptive.
Well, there's a business model. There's a business model.
I don't think they're trying to deceive you, but they're just not. But they don't also want to tell you the whole truth and scare you away from it either, right? And one of the reasons why you get a lower rate on these HELOCs and why they are so attractive is because you're securing it with your home. And they have a secured claim, and so they can lower the rate because they're secured. And again, so these things they're coming. A lot of them are coming due now that people did in 2009, 2010, 2008, and now they're facing this.
We really need to have. I'm looking so forward to our other show, and I don't mean to cut you off on the Trust Radio Network, but we're going to have some title insurance guys talking about title insurance. We're going to have another. I think we should have David back on and just talk about just to go through the basics. What is a mortgage?
When he says David, he means David
Hochberg
from Homeside Financial, and he's a friend of the show and a guy that I trust, and he's on the Trust Radio Network. And
have him back on and explain what a second mortgage is, what a HELOC is, what a regular mortgage, just to go over the basics so people understand what they're getting into.
I agree. So you should know this before you go into all this stuff. But anyway, so this is what's going on. So if you have one of these dormant loans, you should probably make a move to do something about it. Okay, there are some things you can do. Sometimes you have to, if you're underwater, you can get rid of it in a Chapter 13. You can strip it off, and I've did that for a lot of people.
There are strategies that you could take. You have to enact, though. You have to call Opem Tax Resolution 312-664-6649 and visit ChicagoTaxTeam.com. It's going to be your hub to help fight the IRS. There are strategies, ladies and gentlemen, that you can take, as I just said. Do not sit there and let this become an issue, because you will have your home foreclosed on, and you will lose your home. This is a very serious issue. You have to take action now. Opem Tax Resolutions there for you. 312-664-6649. Listen to our sponsors. And come right back here on AM560, The Answer.